Don't take bonus depreciation in 2024, and whatever your accountant is telling you is a lie. My name is Boris Musheyev. I'm a CPA and a tax strategist. In this video, I will tell you the truth about bonus depreciation and the alternative that you could use in 2024. Ready? Let's go. Hey, welcome to my whiteboard tax strategy. My name is Boris Musheyev. I'm a CPA and a certified tax strategist. Every Tuesday, I release a tax strategy video here on YouTube for you, the business owner. By watching this video, my goal is for you to start paying less in taxes right away. So go ahead, subscribe to my channel, like it, share it, and even comment below. I appreciate you. Now let's get started. Let's talk about what is really a depreciation. A depreciation is basically what IRS decides what the class of asset should be. It has its useful life, right? It could have a useful life of 5 years or 7 years, 10 years or 15 years. So for example, equipment or automobiles could have 5 or 7 years, right? Real estate, residential property, 27.5 years. Residential property, 39 years. Basically, IRS says take the cost of that and divide it by the number of years. That is your deduction every year, which seems pretty cool, okay? Now, but not so cool. The reason I say not so cool is that you just spent $100,000 buying an equipment and you only get a $20,000 deduction. And then we have, amortization. Amortization is for things like software or goodwill when you buy in a business. That may have like a 15-year amortization life, something that doesn't have a tangible, right? It's not a tangible asset. So in this video, I really want to focus on bonus depreciation and Section 179. Now, as you know, bonus depreciation, when President Trump took office, he basically said all the assets that you buy, instead of dividing the number of years, 5, 7 years, or 27.5 years, 15 years, whatever that may be, you can take everything as deduction in your first year. And that is called bonus depreciation. Before September 27, 2017, the bonus depreciation was at 50%. So you bought a $100,000 equipment, you get a $50,000 write-off. The difference you write off over the course of, let's say, 5 years. Okay. Now, with the bonus depreciation, after President Trump took office and passed Tax Cuts and Jobs Act, he said, nope, all the equipment that you buy is going to be 100% deductible in this first year. Everybody was like, whoa, this could apply to your equipment. This could apply to your rental real estate investment. This could apply to your auto. Like, it was a huge, huge deal for a lot of business owners. Okay. Now, but it came with a cost, meaning to say, or I should say expiration date, not a cost. In 2020, it basically expired in 2022, by end of 2022. In 2023, you could take 80% depreciation deduction. In 2024, 60% depreciation deduction. Now, at the time of me shooting this video, there is actually a bill that was passed and approved by the House, but not yet Senate, to bring back the bonus depreciation to 100%. We still don't know if the bill is going to pass the Senate, and we might end up with a 60% depreciation. And a lot of business owners are crying, and they're hurt, and like, wow, IRS doesn't like us. But everybody seems to forget, including their accountant, that we have something that is called a Section 179. And how you can use a Section 179 compared to bonus depreciation, something that your accountant is probably not telling you because you don't have a tax advisor. We're going to talk about Section 179 and how to use it as a tax strategy right after this break. Hey, Boris Musheyev here. Sorry for the quick interruption. 5 seconds, I promise. I want to make sure you get your free PDF, 7 write-offs every S-corporation business owner must know. The link to this free PDF is in the description below. That's it. Thank you so much. Continue watching. Welcome back. Let's talk about Section 179. Now, before the whole bonus depreciation became 100%, business owners could also take advantage of something that is called Section 179. So that means that you could still deduct 100% of the assets that you purchased. Maybe not all assets, such as, for example, autos that are more than 6,000 pounds. They had limits, or real estate rental properties. But the Section 179 was still a pretty good write-off, especially if you buy a lot of machinery and equipment in your business. Now, the limit for 2024 to write off a Section 179 is 1.220, right? $1,220,000. That means the phase out doesn't begin at $3,050,000, meaning say if you buy equipment at $3,050,000, all these numbers in my head, then there's a phase out is going to begin. But if you're a small business owner and you're under that threshold, up to $1.22 million, bam, can be deducted 100% in the first year. Compared to bonus depreciation, if the bill doesn't pass the Senate, then we're back at 60% bonus depreciation for 2024, okay? Well, not we're back, we're actually at it right now. So 2024. So what we want to do right now is actually properly plan for this year whether we should take Section 179 or bonus. If your taxes for 2023 are not yet filed, you can actually do after the fact planning, and I'll talk about it here for 2023, because in 2023 bonus depreciation was only 80%. Now I love Section 179. Why? Because it actually is pretty flexible. As long as you have profits in your business, you can take Section 179. If you have $0 profits or you have losses and you bought equipment, any Section 179 depreciation generated by that equipment that does not contribute to the loss, for example, is just carried forward. That's where bonus depreciation could come in handy. But in Section 179, you also can pick and choose assets. The class of asset. With bonus depreciation, you can't. If you bought one equipment, then and you choose bonus depreciation, then all equipment should be bonus depreciation. With Section 179, you can pick and choose which equipment you want to do 100% of deduction, you don't want to do 100% of deduction. Very, very flexible. You also can do a partial depreciation. Let's say you bought a $500,000 equipment and you only want to take $300,000 in its first year. As a matter of fact, we did that with the client's airplane. Okay, the client called us. He's our tax advisory client, wants to buy an airplane, legitimate use for the business. And we actually sat there and calculated what will it look like if we take a partial Section 179 compared to how much we can carry over to next year. Did a lot of planning, came out to great benefit. Tax savings, okay? So Section 179, so whatever you're being told by your accountant, oh, bonus depreciation is gone, you can't take advantage of it, you actually can if you properly plan with your tax advisor. Now, bonus depreciation, coming back to bonus, it was really awesome to take 100%. Why? Because you could actually write off 100% of a business vehicle that weighed more than 6,000 pounds. You could also use bonus depreciation when purchasing real estate investment property, such as rental real estate, doing cost segregation studies. 100% bonus depreciation was a winner. But now that the tax law is changing and the House passed the bill to bring back bonus depreciation to 100%, as of right now, when I'm shooting this video, the Senate hasn't approved it yet. So we still don't know what we're doing. So if you are watching this video in 2024 and your taxes are an extension for 2023 or they're not an extension, you've got a lot of assets that may benefit from bonus depreciation, you might want to put that return on extension to make sure that if it does pass, it may be retroactive to 2023. Now, let's talk about, Boris, how can we plan for this? How can we use this tax strategy with a Section 179 or even bonus depreciation? And what should we be doing? We'll do this right after this break. Hey, thank you so much for watching the video. Very quickly, if you don't mind, I want to ask for your help. I need your help. I want other business owners just like you that will benefit from a video like this to catch this video. The best thing that you can do for me, please either like the video or even say something in the comments, because that really helps the YouTube algorithm when it sees a lot of engagement to push the video to other business owners just like yourself, or better yet, subscribe to the channel would be much appreciated. Thank you again. Now let's get back to the tax strategy. Welcome back. Let's talk about how to implement these strategies. Number one, what's really cool about depreciation planning, you're going to buy equipment whether you need it or, you're going to buy equipment because you're going to need it in your business, right? You're not going to buy it because you don't need it. So you're going to need it. And what I like about depreciation planning is that you can actually also do not before the year is over at the time of purchase, but you can also do after the fact, the year end. Let's say you didn't get a chance to do any planning. Oh, now you finally got yourself a tax advisor instead of working with a tax preparer. You can actually do year-end planning. It's like, hey, if I take a bonus depreciation or if I take a Section 179, how can I do it? Can I choose which classes of assets? I don't want to depreciate everything this year, but I only need, let's say, $500,000 in deduction. You can actually plan that at the year end. What's really important also, estate planning. If you do decide to go with bonus depreciation, what we had seen a lot when people were taking, or business owners were taking 100% depreciation, not all states complied, especially New York State or California. If you took, let's say, bought equipment for $100,000 and you got a $100,000 write-off, when your tax return is being prepared, the software that your preparer or your tax team is using is adding back the $100,000 as an income on the state return, and then takes that 100 and divides it by 5. Let's say it's a 5-year depreciation. Then states don't comply, but states comply with Section 179. So it's a huge planning opportunity. If we look, wait a second, I could either use bonus or Section 179. Where do I benefit the most? Definitely do some state planning. Profit planning. If business has no profits and you bought a lot of equipment and you need to generate loss, number one, make sure you have enough basis in your business. I've did a lot of videos on my YouTube channel about shareholder basis, owner basis, S-corporation basis. It's really important. So if you have a loss and you got equipment, especially if you finance it and you want to use that equipment as a loss, which you may, okay, you want to make sure that you use bonus depreciation instead of Section 179. So profit planning is super important. Like I said, all of these 3 things that I talked about right now, this can be after the fact planning as well. At year end, before your taxes are filed, if you need to file for an extension, go for it. If you think extension is what is it called? An audit trigger, that is not true actually, okay? Extension is giving you enough time to get your documents together and file it with the IRS. Now, if you have taxes due with an extension, you want to make sure you pay that. Other than that, this can be done at year end, and I'm hoping that this video was helpful for you. Until the next time.